Testing, testing. There we go. Sorry about that, ladies and gentlemen. Anyway, as I was saying before, Microsoft, very powerful stock that we should all be investing in. Okay? Sorry for the technical difficulties. I think I'm good now. Thank you for letting me know, guys. Anyway, what I was saying before anyone could hear me, is saying that Microsoft is a kick-ass stock and has long-term potential for growth. A lot of gains in that particular stock, because we understand that Microsoft, whether you are 20, 30, 40, 50, or 60, you have used Microsoft in some sort of capacity, where either you were operating on a Mac PC, not a Mac PC, but a Windows at your home or at school, at college, or administration office. We've all used Windows in some sort of way, because we understand that Microsoft is mainly a software company, okay? It's mainly a software company. They really tried to get into the mobile cell phone game, and they didn't do so well, so they backed out of it, okay? Now, who is their competition? Who is Microsoft's competition? We know that Apple is, but Apple is also a software and hardware company, but they're all technology companies. Now, let's get into a little bit of this fun information about Microsoft that I think is very interesting when I did my research last night and today. So let me share this information with you, okay? We're just going to go over to the basic internet. I just Googled a couple of things today. Blow this up for you guys. And so I just simply type, what type of stock is Microsoft? It says, is Microsoft a good long-term stock? I'm right here. It says, Microsoft is worthy of investment. The time frame should be long-term, but is also tradable for short-term swings. This is not a stock to short without technical reason. It is important to shed any emotion while investing in it, especially now. Now, this was dated back in May 20th. That's when things were very rocky, but it's a long-term stock. And I'm gonna get into some details so you can get a better idea and better context of what they're referring to, okay? So my PE ratios right there. It is calculated as a ratio of market capitalization and no one shares outstanding in the market. So if company X offers a large number of shares during the IPO, its per share price would be low. Microsoft had 9 stock splits in their lifetime. So Microsoft continues to grow. They continue to offer investors more opportunities to make money with their company. How much would a $1,000 investment in Microsoft be worth today? A $1,000 investment in Microsoft in 2009 will be worth more than $6,500. Now, what if I told you, if you were to invest this one measly $1,000 back in 2009, that today, 2019, not today, 2019, but their reference 2019, it would be worth $6,000, $6,500. Would you take that investment? Long-term investment. Now, for a total return of 550% of your $1,000, okay? In the same time frame, by comparison, S&P 500 earned a total return around 260%. So Microsoft was killing the market. Let's move on. Now, this is the kicker, okay? This is not your sole source of you invest in Microsoft, but we're going to get into the time chart. We're going to get into some analytics. We're going to really build this thing up, because I'm already give you my where I'm going to do. I'm going to invest in Microsoft. I've invested in Microsoft before for their measly dividends. I think it's only like 50 cents per share. You'll get every 3 to 4 months, according to how many shares you have. So they don't really give a lot of dividends, but they give dividends because Microsoft still has room to grow. Okay. How much will Microsoft stock be worth in 5 years? Quote is equal to $216. This is August 5th. Based on our forecast, a long-term increase is expected in the Microsoft stock. Pre-prognosis for 2025, okay, 2025, July 30th, so let's just say August, for $400 per share. $400 per share. Last time I looked at Microsoft, I think it was up to $212. It's still fluctuating, but we're talking about in 5 years, it's going to double, okay? Investors are saying that it's going to double in 5 years. So with a 5-year investment, the revenue is expected to be around 84%, so 85%. Your current $100 investment may be up to $184. Okay. So if you invest $100 in Microsoft right now, you can expect to see $84 in that return. So the more you invest, the more you receive. Okay. Let's move over to the Microsoft stock. Let's do current day live. Right now, nope, that's not Microsoft. This had it in there. There we go. Microsoft right now is worth $209 per share, and it's up 0.3%. Okay, it's up 0.3%. But again, we're thinking long term. Let's look at the time chart. All right, look at this. Is this not wonderful? Like, if you was a new investor, if you are a new investor, this is something that should really motivate you. You like, okay, well, this looks really good because the only thing I see is going up. And I'm pretty sure that dip right here, this dip you see, I'm pretty sure that's COVID-19. Let's check it out. Yep. March 20, 2020. So April, May time frame, you'll see a lot of fluctuation with stocks and they drop, but they're climbing back up. So me, before Microsoft gets any more jiggy with it, I'm going ahead and buy me, I'm gonna buy me one share. Okay. I'm gonna buy me one share. I'm gonna have to probably put, I know I don't have enough buying power, deposit 220. I'm gonna do that, deposit funds. Now I'm back, I'm gonna refresh. Oh, it's in there already. Robinhood is getting better. I think Robinhood heard me talking bad about them every single day, and they're getting better. So I'm about to buy a share of Microsoft. I do have enough power. Convert to limited order. I don't care what you do. Just buy it. Okay, done and done. I should have one share of Microsoft. Now I'm going to refresh again. Microsoft is doing absolutely tremendous. Like it's a wonderful long-term investment stock. And there you have it, ladies and gentlemen. I have my one share of Microsoft right here, as you can tell. And I'm down 17 cents, but I don't care because I'm thinking what? Long term. All right. For anyone who's living in this century, don't know about Microsoft, let's get into let's tell what the company is about. Because if you don't know what Microsoft is, then you've been living under a rock. You've been living in a cave. You've been living in purgatory. I don't even know. All right. Microsoft Corporation engages in the development and support of software, services, devices, and solutions. It operates through the following business segments: productivity and business processes, intelligent cloud, and more personal computing. The productivity and business process segment comprise products and services in the portfolio of productivity, communication, and information services of the company, span a variety of devices and platforms. The intelligent cloud segment refers to the public, private, and hybrid served products and cloud services of the company, which can power modern businesses. Now, it's saying a bunch of blah, blah, blah. We got it. We understand. You do a lot of stuff. Okay. The company was founded by Paul Gardner Allen and William Henry Gates, also known as Bill Gates III, in 1975. Some of us was not born. Your boy was not born. Okay. And it's headquartered in Redmond, Washington. Okay. They have a wonderful and beautiful campus out there, and they're making tons of money. So you should be an investor in Microsoft. Okay. I'm going to keep putting that out there. You won't really see me go too strong on some stocks, but this stock is not going anywhere. I don't think in my lifetime. Microsoft is going to continue to grow. They continue to make great business decisions. Okay. Great business decisions. Okay. So I'm gonna go back up to the time chart because I only did 5 years. I'm gonna do 1 year because you're gonna see in the past, like maybe week or month, every stock performs poorly at some point of time. Okay, at some point in time. All right. 1 year, they was up 54%. In the past 3 months, they've been up 18%. In the past month, they was only up roughly 3%. And the last week, they've been down 2.4%. But today they are up 0.21%, which is not much, but it's still 44 cents. Now, when I think about money, I think about, some people think about money in thousands. Some people think about monies in hundreds. Some people think about money in dollars. I think about money in cents, right? Like right now, I'm looking at the Microsoft stock and it's going up. I've already made a good significant amount of money. And you're like, what are you talking about? Well, think about it like this. Have you ever just went out to the store and spent $200? Anybody? You bought a chair, some furniture, maybe some tech, a TV, or any sort of apparatus maybe you bought an expensive blender and you spent $200. Did you get any money off your return? Now, granted, I'm speaking in very minuscule amounts of money, but if you can continue to invest $200 a month in Microsoft, right, doing some dollar cost averaging, where you automatically invest inside of a stock. Now, when the stock is down, you buy more of the stock. When the stock is up, you buy less of the stock, but you're still buying that stock. Like, take, for instance, if you look at my portfolio, we go right here, ladies and gentlemen, I have $10.46. Well, I want to spend all that money. I want to invest all that money with Microsoft. So I'm going to switch my investment in to dollars, and then I'm just going to put $10.46. I don't want no money in my portfolio because money sitting is not making money, and my money makes money. We have to understand that your money needs to be making money at all times. Just because you see a depreciation of a stock go down, like take, for instance, when I went to 1 week. If you see this, some people get weary, some people get impatient. Let me tell you something. I don't understand why investors, I don't understand why I have sold stocks in investments that the analytics say is going to grow, but I get emotionally involved. I know a lot of you get emotionally involved. Let's not get emotionally involved when it comes to investing, okay? When you get emotionally involved, as I always been saying this from Warren Buffett, okay, the transfer of wealth is from the impatient to the patient. Because if you're a patient investor, you're going to make money and it's going to compound on itself. You're impatient. You're selling off all your assets. Guess what? You don't have any money anymore. Okay. You're losing out. You're losing out on the potential gains if you would have stayed investing. Now, there is an exception to the rule. Day traders. Day traders are exception to the rule because they bank on the decline of stocks, where they buy it at the lowest point for that day, or they, according to their analytics, they buy up a lot of stocks. And at the peak, as they're looking at their indicators, they're looking at their candlesticks, they're looking at their RSIs, they're looking at movement averages, they're looking at all their indicators of when they should sell it. So take, for instance, now, if they would have bought it pre-market, right, at, let's say, for instance, $209, my apologies, $209, right? They would have bought, I don't know, depending on how much a day trader has, because in order to be a true day trader, you have to have $25,000 in your account. This is just for example, because they probably wait for larger profit margins before I tell you what I'm about to tell you. But they bought it pre-market at $209, okay? They bought 1,000 of those shares of Microsoft. And then when they see the peak, they will sell all of those stocks, and they would have made a significant amount of money. But again, most day traders wait for a significant drop or increase because of the profit margins, okay? So moving along. All right, they have 163,000 employees. Their market capital is 1.59 trillion. Of course, they were founded in 1975, and their dividend yield has been raised. It's at 0. So it's slightly under 1%. But we'll get into the dollar amount, what that really means, because you're only getting like 50 cents, okay? Here are some of their collections, and then video games, computer hardware, software services. Of course, they're one of America's 100 most popular stocks. And then here's some of the top news, okay? Facebook, Snapchat showed interest in buying Dumbash, and Microsoft moved on to TikTok deal. So here's another good reason to invest in Microsoft. Trump kind of gave Microsoft the go-ahead and approval to buy TikTok. Okay, so because they were going to ban TikTok because they believed that it was a Chinese spy app or some sort of app that way. So Microsoft kind of sees value in TikTok. They see value in TikTok. They say, you know what? We're looking into buying TikTok. So they're going to pay off the Chinese, and they're going to have sole rights to TikTok, which is going to make TikTok American and American stock, because TikTok has a version in America, and they have a different version, a stripped down version, a more secure version in China. So, but everybody loves TikTok. They love doing these little short skits, short videos, short dances, whatever people doing, short joke, clips, whatever. So people are loving TikTok, okay? So Microsoft is seeing value in it, and believe me, when they buy TikTok, I believe that stock is going to raise from anywhere from 2 to 6%. Let's see who's in the chat today. I don't want to ignore you guys before I ramble on. I forgot my. All right. So we have Charles Green. Thank you for letting me know about No Sound. John Campbell and Stephen Gardner. Good morning, gentlemen. He says, does Microsoft pay a dividend? Yes, they do. Microsoft pays a dividend, I believe, of 50 to 51%. Not much at all. Not much at all. But we're going to get into that. I'm going to actually show you guys that. Dow rallied 289 points on gains in Apple and Microsoft shares. Okay. Analysts are saying, do not sell Microsoft. Do not sell Microsoft. Let me tell you as an analyst, do not sell Microsoft. This thing can turn red and green all day. Don't you sell Microsoft. The analyst of 33 says buy at 88%, hold at 12%, but none of them say sell. Okay, Bull says at Morningstar, public cloud is widely considered to be the future of enterprise and computing. And believe me, that is where the world is going. Everything is in the cloud. Everything is in the cloud. Nothing is really hardware anymore as far as, like, I have an external hard drive to back up videos and stuff like that. But most of my files, medical files, everything has been done virtually. It's been digitally saved in some sort of storage facility, okay? Digitally. No one, like, remember back in the day where people had those 2 to 3 file cabinets in their office? That's kind of was the thing. Nobody is doing that. I don't even have a file cabinet. Everything is saved on the cloud, okay? And different companies have different clouds, and a lot of them are free. You know, Microsoft has their own cloud. Google has their own cloud. Apple has their own cloud. Dropbox has their own. I mean, everybody has their own cloud. Some of them pay, some of them are free for a certain amount of gigabyte, but everything is stored in the cloud. So that's where things have been moving rapidly towards, because that's where technology is going. Everything is going to be essentially streaming because America internet is getting faster. Now, granted, there's other countries in the world with that has faster internet than America. Take, for instance, Kenya has faster internet than America. Korea has faster internet than America. Japan has faster internet than America. And what I mean is, throughout their entire country, mostly, they get over a gigabyte worth of speed, where you may be dealing with 89 megabytes or something worth of speed. Look, go to SpeedNet, go to speedtest.net, go to speedtest.net and check how fast your internet is. Because if you don't have a fast package, now granted, a lot of people on YouTube, they either have like your half gigabyte package or your full gigabyte package, because you need certain amount of upload speed and download speeds. And the reason why I'm giving you all this information is so you to understand how important Microsoft is going to be in the future, because that is the world that they deal in, okay? Here are some other relatable stocks comparable to Microsoft that I believe that I know will be profitable in the future. We see Apple about to hit $500. We see Facebook about to hit $300 a share, and Amazon, okay? I talked about Amazon yesterday. Check out that video I did. I talked about gold, silver, Amazon, and mostly Tesla, okay? Great stocks to be investing in. Let's move on. Microsoft, okay, Microsoft. Now, let's go to this. It opened up at $209, and the range for this year, it only kind of went up for $2. The 52-week range, though, if you would invest in Microsoft when it was $132 and it reached $217 and you sold, your profit margin was absolutely tremendous. It was absolutely amazing. It was great if you could do that. And believe me, there's a couple of hundred people out there who made millions of dollars off of Microsoft, off that price margin, off that profit margin right there. Okay, so what's else important to know? It says EPS, earnings per share, $5.76. They are a very profitable company, okay? And the only reason why Microsoft doesn't pay a lot in taxes, because they give to charity, okay? Bill Gates started that. William Henry Gates started that when he was in Microsoft, and they're still doing that today, okay? So they pay taxes, but they don't pay as much, okay? Let's move on. Now, dividends. A lot of you guys are talking about dividends. As we said, it said Robinhood was 0.98. Here is 0.97. It fluctuated. So for every share of Microsoft, you're only getting 51 cents. That is what Market Watch is saying. you're only going to get 51 cents per share. So what's the takeaway when it comes to dividends from Microsoft? For me, I'm not investing in Microsoft because of the dividends. I'm investing in Microsoft because of the growth. Because we go back here. Now, granted, this is just a prediction. That doesn't mean that it's going to come into fruition. But dealing with Microsoft, this is what people are saying. It says, based on our forecast, our long-term increase expected that Microsoft stock will go to $400 right here. Its prognosis for 5 years from now will go to $400. Now, again, a lot of you are thinking about those quick investments to gain a lot of money. A lot of those really incur a lot of taxes. Nonetheless, when you stay invested, you pay less taxes. And guess what? Think about it like this. If you invested $200 a day and then someone say, hey, 5 years from now, that's going to be double. A lot of you like, oh, I don't want to wait 5 years for an extra $200. But this is money you're going to spend on something frivolous. You're going to spend on something that you really don't need. That's why I love investing, because your money is here and it's there when you need it. Now, granted, during the recession of 2008, 2009, there was a lot of people who lost a lot of money. Okay, there was a lot of people who lost a lot of money. And I'm gonna tell you why they lost a lot of money. They lost a lot of money because they did what? They sold their shares. They sold their stocks. Because again, this is the way how I look at this. And hopefully a lot of you guys agree. When you are invested in different stocks, when you look at it every day, every week, every month, and believe me, I advise you guys, if you're a long-term investor, do not look at your portfolio every day. It's going to absolutely drive you nuts, because it's going to send you on an emotional roller coaster. Oh, I lost $100 like the other day. My portfolio went down $700, and I was like, I don't care, because I'm staying invested. Now, granted, when you first see it, you're like, oh, man. But then you're like, whatever, because I'm not going to sell my shares. It only means something, okay? It only means something when you sell your shares. So take, for instance, if you have $100 in Microsoft, okay? I'm going to go back to Microsoft to kind of give you guys a visual so you can have something to look at instead of me just running my mouth. Here we go. If you had 100 shares of Microsoft, and you bought Microsoft, let's say, let's go out a year. You bought it at $135. So March 23rd, Microsoft was worth $136 roughly. Let's say if you would have bought it then, right? Then Microsoft raised up to $212, okay? Then Microsoft dropped down to $130. But don't forget, you bought it for the low of $135, somewhere up in here. You bought it at $135, but it dropped down because of market recession, okay? 2008, 2009, it went down to $130. You saw huge profit margins increase in your portfolio because it went all the way up to $212. So you're like, yeah, man, I'm in the money. I'm investing good. Then boom, the recession hits. You have 100 shares of Microsoft. Now it's at 130. You bought it at 135. So every share that you bought, you lost $5 on. The only way, remember this is very important. Remember this. The only way that you lose money is when you sell your shares, okay? AKA when you trade your shares. When you sell your shares, that is when you lose money. If you still have your shares and you see the price of them shares go down, you simply lost value in your portfolio, but you didn't lose any money. You only lose money when you take your money out of the market. Does that make any sense? Because your money is still investing. Because again, I'm going to go back. Look at this. March right here. Right now, we're around $209, right? So if this was to climb down to $182, right? If you would have sold your shares, you'd have lost $20. Well, about $25. But if you would have stayed invested, you can look for those gains once again. Now, this is also important, and this is again for a graphical representation of my point. What happens here? What if people doing, and a lot of people did this, they see a solid stock like Microsoft, a solid corporation like Microsoft increase in share amount each and every month, each and every day. They see the trajectory going up, 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 up. Then COVID-19 hit. People get weary. They think the world's going to end. They trying to take their money out. They sell their investments. And guess what? They sell their shares 137. And today, a lot of people who kept their investments and bought more Microsoft are sitting high and happy and rich. Because when COVID-19 hit, I was in here buying shares. Not a Microsoft. Not a Microsoft. But this is the thing. Microsoft in March 20 this year was worth $137. If somebody say, hey, man, you give me $137 today, and on August 13th, I'm going to give you $212. Would you take that deal? I know I would. You're like March, April, May, June, July, August. Wait a minute, 6 months you're going to give me, think about the profits here, okay? Think about the profits here. Now, unfortunately, my one little share of Microsoft, I'm losing 51 cents. I'm feeling happy though. I'm very, very happy because I know that that one share has the potential in the next 5 years of doubling itself. Because I've spent stupid money before. I bought so much things for $200 that didn't work out. I like, man, you just wasted $200. How many of you just wasted $200 on some shoes that you end up didn't like, or you went to go buy a bunch of junk food for a cookout that nobody really showed up? Or maybe that was just me. Anyway, you get my drift. So let me see who's in the room today. I'm going to read some of your notes, and I'm almost done here. Okay. We have Lady Luck. Good morning. Good morning, Lady Luck. We also have Clan Killer. Every time I read your name, I get tongue twisted because I'm like, is he actually saying Clan Killer? He's really saying Clan Killer, guys. He really is. All right. Who we have here? Code Red said, what up? What up, Code Red? Clan Killer, when he said few sales slowly moving up. Michael Company. Yeah, I guess Michael Company is on fire. When I was looking at them, when we were talking about it probably a couple of weeks ago, it didn't look too good. Also, don't sleep on DXC, Harvard Bio, and New Well. Okay, I'm going to look into those. See Wingstop and Peloton stocks. People still eating those chicken wings, huh? Okay. And Stephen Gardner said, I bought Ford. It says 8.3 dividend. What does that mean? 8.3% of my invested money? No, per share. So let me just read the rest of these notes and I'll get into that, Stephen. I missed out on Beyond Meat and Adobe Train. Yes, you did. I missed out on Beyond Meat too, but look out for Impossible Meat. Impossible. Remember they got the Impossible Burgers and all that? They should be coming public here pretty soon. I always tell people, go over to Google and sign up for their IPO release. I signed up for the IPO release, and every day it's like they give you a new IPOs or projected IPOs that are releasing. But we're going to get into what Steven says about his 8.3%. So I'm gonna go over to Michael. He says Ford. And let me tell you, I don't like Ford, man. They're trying to, and I think they have the opportunity. They're going to come back eventually, okay? Because they're getting into electric vehicles, okay? Because again, Ford gave Rivian $500 million, okay? They gave Rivian $500 million, and I think Rivian is going to share their technology with Ford, okay? So let's get into Ford Motors. Here we go. Let's check this out. All right. So right now you were talking about dividends, right? So their dividends is only 15 cents a share. That's all they paying in dividends. Now, even though you're saying that, even if I go on to Robinhood and I show you the percentage of Ford, I think like you said, 8.3%, and everything is 8.3%. Because Ford, look at their stock. I mean, now, granted, I looked at it with $6. So if anybody bought Ford at $6, let me see for the past, was it last week? Yeah. So the past week, they were around $6 going up to $7. Yeah, they're teetering the past month. They were really, really down. So $6 in the past month. But their dividends, I think, was even higher than this. I want to say their dividends were like anywhere between 10 and 12 at one point, but they've been losing a lot of money. They've been losing a lot of money, and Ford is a very, very old company. So they had to get with the new times of electric vehicles, and that's what they're doing. So to answer your question, Stephen, each share that you have of Ford is only worth 15 cents, and you're going to get paid those dividends every 3 to 4 months. Okay, I'm about to wrap it up, but I'm going to get into one more share to what Clan Killer was talking about. Give me 1 second. Let me look at my screen here. There was one particular stock that I was, okay, Michael Company. That is the one that I was investing in, but I got out because I didn't see the profitability in that. Not Michael's. You said Michael Company. You said Michael Company. I remember getting into that. Michael Company. Let's see here. No, that is Michael's, right? I think that is Michael's. Let's see, fuel cell as well. We're getting right into this. Give me 1 second. Okay, yeah, I was investing in fuel cell as well. Okay. So fuel cell, I can see the potential for growth in this. And I know a lot of this for you guys, you're like, okay, I can do this stock. Okay, I can do this stock. And you can. Let's read this a little bit about it. I'm not going to read this entire paragraph, but Fuel Cell Energy develops environmental responsible distributed baseload power solutions through proprietary molten carbonate fuel cell technology. It develops turnkey distributed power generation solution and provides comprehensive services for the life of the power plant. Okay, so it's definitely a power company. I don't believe, it was founded in 1969, so it's older than what I thought. They only have roughly 538 employees. What other collections do they have? Manufacturing is one of the 100 most popular stocks under 25. Engineering, energy, research and development. What else? And it looked like their quarters their earning per quarter is looking absolutely great. They're doing great things here. Just looking at this, I will have to dig into this stock a lot more, but they got Plug Power. You know, I love my Plug Power. Okay, Plug Power is doing great. Ballard Power Systems. Let's see, electrical and mechanical vehicles. I actually did a stock review. If you want to know about electrical and mechanical vehicles, as I did a stock review on Plug Power, I did a stock review on NEO. So what else do they have? They don't even really have any news stories, but just watch out for fuel cell. Okay, watch out for fuel cell. Now, I'm just for fun. I want to see how I'm performing with Plug Power. This is just me. Okay, so far, my total return on Plug Power has been 50%. 50% of return, which is absolutely great. Let me tell you something. 7% return on your stocks that you're investing in is quite common for the stock market. 10%, you're doing okay. 7% is common. 10%, you're doing okay. When you get to 20%, you're doing absolutely wonderful. But when you're doing 50%, out of this world. Anything at 50% and over, because you can see 50%, 100%, 150%, you're doing absolutely wonderful, okay? So I am doing great with Plug Power. I only have 36 shares, but I do have an option. I have two options, and one I'm losing with, one I'm winning with. So the one I'm losing with, oh, no, I'm actually gaining money. So my call at $10 per share on Plug Power, I've made $93 at 40%. I should have bought a lot more options. I'm so silly sometimes. I should have bought a lot more options. Unbelievable. So my total return is $93 and at 40%. And my today's return is $56 at 20%. So I'm doing absolutely great with Plug Power. All right. So ladies and gentlemen, there you have it. I'm going to read your notes, send some shout outs, and I'm going to get out of here. Who else do we have here? Any more pertinent information? We have Gladys Garcia. Good morning, Gladys. Nice to see you here today. We also have Clan Killer saying about Google IPO. Is it called Google IPO? No, you have to look up, you have to actually search Google IPOs, kind of like, I don't recall, I did it a couple of years ago. You just have to say how to find out about IPOs with Google, something like that. Clan Killer said, I regret selling my Novavax. Me too, but I don't like I love biotech, biopharmaceutical stocks, but I don't like them because Those are the only stock. I'm telling you, those are the only stocks that I get emotional about, because they be like, pew, you made $1,000. Pew, you lost $10,000. You be like, oh my gosh, I can't do it. So when I invest in biopharmaceutical stocks, I'm kind of like, don't look at it, don't look at it, don't look at it. So I feel you on that one. We also have Liz Thompson. Good morning. My father left me MetLife stock. Should I keep it? Yes, you should keep MetLife stock. I believe you should keep it. Because MetLife is not going anywhere. MetLife is a medical insurance company and provider. I don't think you should get rid of MetLife at all. You're going to make me, I'm just going to look at MetLife really quickly. I'm going to look at MetLife because you said something about it. I'm just going to look at it very quickly. This is off topic, but that's okay. The ticker for MetLife is MET. Let's look at how MetLife has been doing. Hey, Ross, how can I invest in Amazon stock? You can invest in Amazon stock easily. Look in my description below, and there's a link for WeBull, okay? Either WeBull or Robinhood, and you can invest in Amazon. You can invest with Amazon with $5, $10, $15, $20, $13.13, okay? When you invest in it, whether it be in Robinhood or WeBull, just make sure you change the invest into dollars and not shares, because you want to invest in dollars. So you can invest in Amazon. Yes, you can. All right, moving right along. I'm going to quickly look at this. I'm just going to look at the timeline. 62% say buy when it comes to MetLife, their 5-year. They have not been doing so well over the course of time. It looks like in the past 5 years. In the past year, they have not been doing well. Past 3 months, they've been up 34%. Last month, they've been up roughly 5%. Past week, they've been up 7%. And then today, they're not doing so well. But I will keep MetLife, and I'm going to tell you why. Where is it? Right now, I don't know how many shares of MetLife, but MetLife is going to pay you for the rest of your life. MetLife is not going anywhere. This company was founded back in 1868. Okay, can you fathom I can't fathom 1868. Did they have cars? Yeah, they had cars back then. I'm just kidding. But back in 1868, and their dividends at 4.39. So for that, every share of MetLife you have, let's see the past 5 years what the highest they've been. They've been up to $50. Okay, but let's go over and see how much MetLife is per dividend. And I don't know how many shares you got. If you want to share with the group how many shares you have, that would give us some sort of reference and context. So they EPS, so MetLife is a very profitable company. Of course, it's an insurance and also a medical providing company. So of course, they're doing absolutely great, okay, at $7.70 per EPS, okay? Dividends, they're only paying 46 cents. So hopefully he left you like 1,000 shares of MetLife, okay? So would I keep MetLife? I would keep MetLife. I will look for other opportunities to invest. I want to buy a piece of Amazon for around 500. Then do so, okay, guys? Again, I have my links at the bottom that you guys can use. And when you go with Robinhood or WeBull, you receive a free stock, and I receive a free stock. I got to get paid somehow, guys. Hook a brother up. Should I say brother nowadays? Nothing. Anyway, okay. Who else? DJ Cool. Good morning, good sir. What about Acorn? Is it okay to invest in? Yes. But I don't like Acorns no more. I got away from Acorns 2 years ago. I don't like Acorns at all. The reason I'm gonna give you one reason why I don't like Acorns is it doesn't have a lot of transparency. Okay, it doesn't have a lot of transparency at all. It just tells you the sectors like common and it don't tell you what you are actually investing in, the corporations you are actually investing in. It's kind of just tell you the markets. Ross, can you check out Polar Stock? I can. But not today, guys. I'm probably have to check out that tomorrow. I'm going to write a lot of this down so I don't forget, because I know you guys want a lot of information, but I try to focus on one stock. And believe me, I'm off script already, but I will look into Polaris as well as some other ones you named. So, ladies and gentlemen, this is Financial Literacy 101. And don't forget, every Thursday night at 7 p.m. Central Time, I go live. And tonight we're going to talk about family and finances, okay? Learn money and be inspired. You guys have a great and wonderful day. Stay safe, 6 feet, cover your face. I'm out.